Welcome back to Alpha Recap. We closed the markets for the day and dug through what moved stocks. And, as always, if you have questions, you can reach us at stockalpha.ai.
Hey, good to be here. Today felt like a quiet but purposeful session. Not a fireworks day, more like people shuffling chairs before the big meeting.
Exactly. Quick headline to kick things off. The S&P 500 finished the day up about 0.1%. The Nasdaq 100 was also up roughly 0.1%. And the Russell 2000, our small cap benchmark, outperformed, finishing up about 0.7%.
Right, so a modest net advance on the big indexes, but small caps really led the tape.
And that was the defining narrative. A cautious rotation into economically sensitive and idiosyncratic names, with traders positioning ahead of Friday's jobs report.
Which made the day feel low volatility. After a few swings in recent weeks, people pulled back a bit, trimmed concentrated bets, and poked around for opportunities in cyclicals and those beaten down sectors.
So, what really stands out here is that breadth was mixed but leaned positive. Industrials, materials, and parts of real estate drew flows, while big tech basically treaded water.
Yeah, that tracks. Tech didn't collapse or rally much. It just kinda sat there. Not a great day for big momentum names.
Tell me more about the rotation. Why did buyers head to small caps and cyclicals today?
Three things. 1. Fresh data and sector headlines nudged traders toward economically sensitive names. 2. Cannabis policy chatter reignited speculative interest. And 3. The calendar. Everyone was cautious ahead of the jobs print, which tends to tilt positioning toward lighter, less concentrated bets.
I mean, when you step back and look at this, small cap leadership often signals a preference for earnings that benefit from tighter domestic demand rather than global tech growth.
Right. Historically, that pattern shows up when investors are betting on US-centric reacceleration. It's not a guarantee, but momentum indicates people were probing that theme today.
Let's break down the sector action. Materials and industrials drew attention from company updates and wrap coverage. Contractors, parts suppliers, and commodity-linked names got bought into on the idea demand might normalize.
And in real estate, the action was selective. A few 8K filings and deal activity pushed certain REITs higher. So it wasn't a blanket rally across real estate, more headline-driven, stock-specific moves.
Utilities and communications were mostly flat. Defensive positioning showed up in pockets, but the overall risk-on tilt kept defensives from outperforming big time.
Energy and consumer were mixed too. It all felt idiosyncratic. Individual stories moving stocks rather than a broad sector rotation.
Let's spend a minute on cannabis. Policy momentum showed up in the headlines today, and that historically fuels speculative rallies in that complex.
Oh yeah. When lawmakers start talking reform or policy shifts, you get elevated volume in growers and retailers. You know how quickly gambler instincts kick in on that news.
Totally. But analysts note this is high beta and headline sensitive, so it's a catalyst for volatility, not necessarily durable gains.
Agreed. Same with crypto-related names. Coverage pointed to developments at Coinbase and how jobs and regulatory headlines could affect trading volumes. Those stocks were under the microscope.
We also saw a handful of company filings that bumped certain names. Braemar Hotels Resorts, Alta Equipment Group, Stone Point Credit Corp, and multiple filings from OSR Holdings. Those filings sparked localized spikes.
Werner Enterprises came up in analyst notes too. Freight demand and pricing power remain a focus for trucking names, and coverage pieces can move those niche corners quickly.
Short reactions.
Interesting day for stock pickers.
Big move in small caps, quietly.
Selective real estate strength.
Now, shifting to the macro backdrop, the calendar was the story. With Friday's jobs report looming, traders tightened positioning. The logic was straightforward. A hot payrolls print can push rate hike expectations higher or delay rate cuts, and that tends to hurt long-duration assets. A softer print, by contrast, would reinforce hopes for a more accommodative Fed.
So markets were in a wait-and-see mode. The muted moves in the S&P 500 and Nasdaq 100 suggested traders weren't aggressively front-running a major policy pivot.
Analysts note that if the jobs report confirmed resilient employment, cyclical sectors could face renewed volatility as rate hike odds repriced. Conversely, a softer number could accelerate flows into small caps and value.
It's a classic binary risk event. Traders were lighter today so that they could react quickly once the labor data hit.
Let's talk technicals and breadth. The market looked like it was consolidating. Small moves in the headline indices underscored the lack of strong directional conviction. But breadth beneath the surface improved because the Russell led.
When the Russell leads it, often signals that folks are rotating into higher beta domestic names. Momentum indicators were mixed. Short-term momentum in cyclicals was neutral to slightly positive, while growth and momentum names lagged.
Volume profiles around key levels will be important to watch, and whether breadth confirms any decisive breakout or breakdown. For now, it felt like positioning rather than conviction.
Historically, rotation into small caps during neutral headline returns has happened at the tail end of tightening cycles or when macro conditions were stabilizing. So the pattern today wasn't out of the ordinary.
Quick check on risks and what to watch next. The jobs report is the big near-term macro risk. Treasury yields and break-evens matter too. Any big move there would alter risk appetite across growth and cyclical sectors.
Also watch sector-specific catalysts, cannabis policy updates, 8Ks, and analyst notes. And earnings season noise will keep causing dispersion, which tends to help stock pickers while leaving headline indices tame.
Looking ahead, if futures stayed subdued into Friday, we expected incremental moves driven by stock and sector-specific news. If the labor data surprised materially, we thought the market could move into a higher volatility regime. That would favor short-term, event-driven trades.
If the jobs print matched expectations, the measured rotation into cyclicals could continue as people priced in a slower pace for rate cuts. Analysts note, again, that this is about probabilities, not certainty.
A couple of quick takeaways before we sign off. 1. Markets closed up modestly overall, but small caps led. That was the real story.
2. Action looked like positioning ahead of a major jobs print, rather than conviction-driven breadth across the board.
3. Keep watching jobs, treasury yields, and sector-specific headlines like cannabis policy and corporate filings for localized volatility.
And 4. Expect more dispersion in the near term. Earnings and filings will create stock-level opportunities while headline indices stay relatively flat.
All right, that's our wrap. If you have questions about anything we covered today, head to stockalpha.ai, where you can ask us directly and we'll answer live. For more market analysis and insights, visit stockalpha.ai.
Thanks for listening. We'll be back after the jobs report with another recap and analysis. Talk soon.